Markets are moving at lightning speed, and the AI revolution is showing no signs of slowing down. Roundhill Investments CEO Dave Mazza is breaking down the massive surge in the memory chip market and why these components are the absolute backbone of our new AI-driven infrastructure. We are digging into how this critical hardware is changing the game for tech investors everywhere.
Your brand new iPhone deserves the best protection, and the iLume 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
The AI trade is officially back in the spotlight, with major fund managers now setting their sights on Chinese artificial intelligence players. Even with global tensions rising, investor optimism is fueling a massive tech rally. We are looking at the Philadelphia Stock Exchange Semiconductor Index, which has just smashed records with an incredible 17-session winning streak that we have not seen in over 30 years. Texas Instruments just delivered the most stunning performance we have seen since the year 2000. After crushing their first quarter earnings expectations, the stock skyrocketed 19% as demand for their analog and embedded chips hits an all-time high. This move proves that the AI gold rush is spreading deep into the semiconductor ecosystem, reaching far beyond the usual market leaders. Finally, we are tracking the midday shift in the Chinese markets, where lithium miners and chip stocks like SMIC and Hua Hong Semiconductor are defying a broader market pullback. From the latest moves by the People's Bank of China to the wild swings in computing power stocks, we have the full breakdown of what is happening on the ground. Make sure to hit that like button, subscribe to the channel, and ring the bell so you never miss an update. Ever wonder what's actually fueling the AI revolution behind the scenes? It's not just fancy software, it's the hardware. Recently on Making Money, Roundhill Investments CEO Dave Mazza pulled back the curtain on why memory chips and photonic stocks are becoming the true heavy lifters of our new AI infrastructure. Think of it this way: AI is the brain, but these chips are the high-speed synapses that keep the whole system from freezing up. Mazza highlighted that while everyone is chasing the big-name chip makers, the real strategic play involves the specialized memory and photonics sectors that are quietly powering the back end of these massive models. It's a fascinating pivot, shifting our gaze from the headline-grabbing algorithms to the physical components that make the speed and scalability of AI even possible. As data demands continue to explode, these components aren't just nice to have, they are the essential foundation of the future digital economy. Are you keeping an eye on the backbone of the AI boom, or are you just looking at the surface? Drop a comment below with your take, and don't forget to hit that subscribe button for more deep dives into the tech trends moving the markets. Remember, the future belongs to those who understand what powers it. Ever felt like the market is playing by its own rules? Just when geopolitical tensions from the Middle East seemed ready to derail global confidence, the AI trade is roaring back to life, and it is bringing Chinese tech stocks along for the ride. It is a fascinating pivot, but let's look at the numbers because they are genuinely historic. The Philadelphia Stock Exchange Semiconductor Index just wrapped up its 17th consecutive winning session. We are talking about a streak that hasn't been matched in over 30 years. With a massive 40% gain month-to-date, this index is currently pacing for its best performance since the dot-com era of 2000. For local fund managers, this isn't just noise. It is a clear signal that the appetite for artificial intelligence infrastructure remains insatiable, regardless of external political friction. It forces us to ask, are we witnessing a decoupling of tech growth from global instability, or is this a bubble reaching its breaking point? As these semiconductor giants continue their meteoric rise, I want to hear your take. Is now the time to jump into the Chinese tech rally, or are you sitting this one out? Hit that subscribe button and let me know your strategy in the comments below, because in a market this unpredictable, knowing where the smart money is moving is half the battle. Forget everything you thought you knew about the AI gold rush being just for the big-name GPU manufacturers. Texas Instruments just pulled off a historic move, rocketing 19% in a single day, their best performance since the height of the dot-com era back in the year 2000. This wasn't just a win, it was a massive wake-up call for the entire market. For months, we've been obsessed with names like NVIDIA. But this surge proves that the massive infrastructure build-out for AI is spreading like wildfire into the essential, boring components that keep the world running. So why the sudden excitement? Well, Texas Instruments didn't just meet expectations, they absolutely crushed them. Wall Street was bracing for a slowdown in the analog chip market, but T's latest earnings report suggests that demand for industrial equipment and data center hardware is heating up, not cooling down. Their forward guidance is so strong that it's got analysts betting that this AI boom has real, structural legs that will carry us well into 2026. Think about it. While the world is focused on the flashy processors, T is the one powering the actual foundation of these systems. This confirms that the AI transition is much deeper than just a hype cycle. This 19% jump added a staggering $30 billion to the company's market cap, completely changing the narrative for investors who had previously left this stock in the dust. It's a powerful reminder that in a gold rush, the guys selling the shovels often end up being just as important as the guys looking for the gold. If you want to keep up with the real-world impact of the AI revolution, you need to look beyond the headlines. Hit that subscribe button to stay ahead of the curve as we track which legacy players are making the pivot of the century. After all, the biggest gains are often found exactly where the market least expects them. Ever feel like the market is playing a game of tug-of-war? That is exactly what we saw in the A-share market today, as major indices slipped into the red, sliding between 0.6% and 2.2% by midday. It's been a rough morning for investors, with the Shanghai Composite, Shenzhen Component, and Kinext all feeling the heat, as the People's Bank of China maintains a steady hand on interest rates, opting for a modest net injection of liquidity into the system. But here is where it gets interesting. The broader market downturn didn't stop a few sectors from staging a serious rally. If you were watching the charts, you couldn't miss the explosive energy in lithium mining stocks. Giants like Ganfeng and Tianqi Lithium climbed steadily, while others like Jiangxi Motor and Rongji absolutely surged to the daily limit. It's a bold reminder that even when the tide is out, specific sectors can still catch a massive wave. Then we have the chip makers. After a rocky start, stocks like SMIC and Hua Hong Semiconductor clawed their way back, showing some serious resilience in the face of the general market slump. Meanwhile, earnings season is throwing us some major curveballs. Take Shannon Xinchuang, which saw its profits skyrocket over 78 times year-over-year. On the flip side, optical giant Eoptolink tumbled over 12%, a stark reminder that even with strong earnings growth, the market's reaction is never a guarantee. As we look ahead, the volatility in sectors like computing power and the continued slide of companies like YOFC suggest that investors are being incredibly selective. We are seeing a market that rewards high growth potential while ruthlessly punishing misses. What do you think? Is this dip a buying opportunity or a warning to tighten your belts? Let us know in the comments below, and don't forget to hit that like button if you want to stay ahead of the curve. Remember, in the world of finance, the only constant is change.